We're going to be discussing how to build your trading plan. Now, in tonight's class, I'm going to share with you a couple pre-prepared web presentations. If you wish to see these little presentations again, you can do so by going to YouTube and looking for the YouTube channel called Trading Education. Not a playlist, not a search, the YouTube channel called Trading Education. And then you can look for the playlist that says Building Your Trading Plan. Also, if you notice on your screen, I've put together some handouts for you tonight. These will cover everything we talked about in class and more. And I've also given the entire ebook from investing.com, an introduction to technical analysis. This will provide you a great resource in the future, but you need to download these now. You can see them on your screen. There's no registration, there's no fee, there's no anything. Just download them and they are yours for the using, but they're only available in the live class. So when you come to the recorded version of tonight's class, you will not be able to download them. Okay. Also, the pre-prepared presentations I've got for you that I'm going to give you in the class tonight, in the recorded version of this class, it doesn't recopy these prepared presentations. So if you see the recorded version of this class, you'll see a blank space where they were shared with you tonight. Now, in tonight's class, I'm going to use the term security, but I might say Facebook or Google. I might say the euro, I might say Bitcoin, but I'm not referring to any specific asset. Instead of just using the word security, security, security over and over again, I'm just going to intermix the terms so it's a little bit more interesting. I also intermix the terms investing and trading. We're all here tonight because we're traders. We know the difference between investing and trading, and I know the difference. Investing is a much longer term position, and a trader takes a very short term position. But it just gets very boring again saying trading, trading, trading. But equally, any of the concepts we talk about tonight work well in any market. Now, in order to become a successful trader, you need to develop a written trading plan where you put all the necessary trading rules. Basically, a trading plan is your trading Bible. There's no such thing as the ultimate trading plan because there are no two exactly the same traders. And every trader has a different trading style, a different strategy, a different risk tolerance level, a different market experience. It's always better to develop one's own personalized trading plan and modify it as your experience grows.
Throughout your Forex trading journey, you will have both ups and downs. It's easy to get distracted by the different trading methods out there, so you need to make sure you have a trading plan that you stick to, whatever the circumstances. Here are our 5 golden rules for building a successful trading plan. Golden rule number 1 is to keep it simple. You don't need to be a quant, creating complicated algorithms or game theory scenarios for every single trade you place. Simply find a strategy that is straightforward and easy to execute for your particular risk tolerance and trading objectives. Secondly, do your research. By watching this video, you're moving in the right direction. But the more you research the markets and news flow, the more fluent you will become in understanding what makes currencies move, increasing your chances of identifying trading opportunities. Third, be realistic with your goals. Simply stating that you want to double or triple your initial deposit is not enough. Learn to understand risk and reward per trade. Successful traders often have a profit and loss goal on entering each trade. Also, make sure you manage your risk. Work out how much risk is acceptable to you and take it from there. Ensure you're aware of the risk management tools available to you on your platform. Finally, keep a trading journal.
Now, if you think of a trading plan as a checklist, this is a list of things that you will do every day and before every trade and after every trade to keep you out of trouble and make sure that you're following the objectives you had set out for yourself in the beginning. But it's a little bit more complex than this. And I'm sorry, in this class, it'll sound like I'm lecturing you, okay? I'm not trying to tell you what you have to do. I'm trying to share with you how important this is, because too many traders just go with their gut, or they think just having a strategy in their heads or doing something on their charts every time is going to make them a successful trader. But tell me something. Let's talk for a second about a professional football player. First of all, in order to reach this goal, and we're talking about American football at this point, but this football player played high school football. This professional football player played college football. Now he's finally made it to the majors. Sounds like it's the easy route, right? But do you know he practices every day? He's on the field doing scrimmages every day. They're in the locker room watching videos of every past performance. They're discussing new plays. They're mastering the playbook. They are spending all this week preparing for one game on Sunday. They're learning all their opponents' plays, They know everything about the other team on the field, and they know everything about their plans. They know all their goals, all their objectives. And yes, this man's getting paid millions and millions of dollars. And he's going to go through all of this. So why do traders think that they don't have to go through this? They think that they can get online, find a platform, learn a couple strategies, and make $1 billion. And this is why there's so much loss in online trading, because it's easily accessible, but it requires a lot of work. If you think of it, it's a job. It could be a part-time job, but it's a job. Now, a trading plan has more than a strategy in it. It's going to cover the strategies you use to trade. It's going to cover the assets you wish to trade. Okay. It's going to cover what your daily routines will be. Okay. Yes, too many traders think, every day I can just get online and trade. I close the trade and I go on to another trade. Does a businessman do that? A businessman does his plans. He knows what days he can do things. He's got his meetings, he's got everything scheduled. Well, why should you be exempt? You don't trade every day. You have hours of the day that you're going to do your research. You have hours a day you're going to do your testing. You have hours a day, and whether you're trading full-time part, when I'm saying hours, it means a portion of your time. A salesman going to a sales meeting spends hours preparing, making his presentations, getting ready. When he gets there, does his little song and dance, and gets a signed contract. Yeah, he's now made his money, but now he's got to go back and do all the work. He's got to send it all in, put it in the computer, send it, whatever has to be done to reach his ultimate goal, which is getting paid. So you should begin your trading plan with your strategies. Because what happens is, this sounds like it can freak you out. Okay, I got to put all this, how many hours, how am I going to do this? I'm new to trading. I don't even know where to start. Well, the easiest way to start is with whatever strategy you've attempted to use, whatever strategy you've decided you like. Okay. Now you find when you put pen and paper down and put the strategy on pen and paper, you're going to find all the things you've overlooked, all the mistakes you made, all the questions you didn't ask yourself. When you actually write the strategy down, guess what? As you write it down, you're going to fill in the gaps. You're going to fill in the holes. You can say, oh, that's doesn't make sense. And you're actually going to think it out and spell it out. And you'll find when you put it on paper, it gets better. So if you're trading price action setups, or you're trading off a key structure level, whether you're trading off of support and resistance and chart patterns, whether you're trading off of technical indicators, doesn't make a difference. Okay. But write them down first. And this will act as a blueprint for what you need to do each time you interact with the markets. Now, a trading plan is a lot more elaborate than that, but why don't we just start with something small? We're starting with the center here. Once you get that all down on paper, you can, because you're still trading in your free hours before and after and Sunday morning when the kids are all gone and the wife is off in the garden, you can sit down and write the other parts of it. It all doesn't have to be done today. It all doesn't have to be done tomorrow. It all will take a very, very long time because you're going to constantly be adding to it. Eventually, you're going to have many different strategies that will be part of your trading. You're going to have strategies for sideways markets, strategies for high volatility markets, strategies for these assets, strategies for Christmas time, because the markets shift during different times. Okay? You have all different types of strategies that you can drop into your trading plan. But in addition to strategies, then you need to put in your risk tolerance and your money management rules, because nobody, absolutely nobody, not one person in this class should be making a single trade with their money unless they have some type of risk management written down. I'll only take trades when they're paying 3 to 1. I'll always set my stop loss at this point. Okay. I'll always do this to decide to exit the markets. Okay. This is much more important than your strategy, which is simply telling you to enter a trade or leave a trade. Okay. Risk management is the crux to all of the markets. When you do this, you find that a lot of trades you think you would make because of your strategy, you filtered out because you can't make them because the risk is way beyond what you can afford to take. Same thing with your money management rules. Okay. I've seen traders that have $5,000 in their account and they got 8 positions open with all their money tied up in every position they have open. Okay. Well, that's crazy because the markets go haywire. The euro goes off. Donald Trump does something off the wall. Before you know it, you've got all your money tied up. My rule of thumb is at no time do I have more than 20% of my capital ever in the marketplace. But having written strategies with your risk tolerance and money management is like having a market blueprint. This blueprint is essential for developing discipline that will lead you on the road to success. Now, for me, I don't have discipline. I was in the early 80s a trader. I was actually trading on, in Chicago in a pit. Okay. Problem was I didn't have enough discipline. Okay. And I would get overly emotional in trades. I was very, very young at the time, but I would get overly emotional trades, or if I'd have a bad trade, I would get very annoyed and pissed off, and that would affect my next trades. I wish somebody would have told me about building a plan before I was sitting on that floor, because I could have stopped my disasters in 82 and 83 if I followed a plan. So if you're yourself not following the rules of your trading plan, then you are deviating from your plan. One of the most important things to put in your plan is what assets you'll trade. One of the biggest problems we have with online trading is a platform like Alvexo offers you 450 different assets to trade at any given time. And that's fine for the platform provider. But what happens is the online trader is trading, going from, he read something about Google, so he's going to watch Google this week, and then he's trading over, at Tesla, and he goes from Tesla and he's over trading the euro, and then before you know it, they're trading Bitcoin, and then they go from Bitcoin over to trading gold or oil, whatever's the hot one that week, and they're following whatever the hot news is. Okay, this is a disaster waiting to happen because you can't be an expert in every asset. You can't be that knowledgeable. You can't understand the personality of the assets. You can't track that many assets. Now, if your strategy is, say, for instance, you're a trend trading strategy, and your strategy is, I don't care about the asset. I'm only looking for one that's exhibiting this thing on the charts at the moment. I don't care about the asset because I'm only looking. That's acceptable because then you're only looking for a particular pattern or a particular thing to happen on the assets. But I trade a whole handful of 6 different assets, and they're all interrelated because you just can't stay on top of the markets, can't stay on top of all the analysis, can't stay on top of all the economic events, can't understand all the economies, can't understand all the intricacies watching that many assets. So 6 assets to me was the maximum I could handle. Now, whether I'm trading or not, it's a different story, but I'm always watching these assets. Okay. Also means when you go on holiday or it's a weekend, you're not spending your whole day tracking these. You know, you keep your charts are up to date, everything is set, and it makes you an expert at something. You know, like when you go to university and you study some general course, when you go on for your MBA or you go on to your legal degree, you want to go on to medicine. Here, medicine's a perfect example. You go on to med school, and then from studying med school, then you go on to your specialty. Because yes, you can be a general practitioner. You could be a general surgeon, but most people today don't go to a general surgeon. They go to an orthopedic surgeon. They go to whatever different kind of cosmetic surgeon. So what you want to do is become a specialist. So there's also another part, and that's your routine. And like I said, I don't want you to feel like I'm lecturing to you, but these are important things for you to think about. Now, your routine is, if you want to be a full-time day trader and you want to say this is your schedule of what you're going to do all day, every day, okay, that's a little bit over the top. But the fact is, trading isn't about making tons of trades and being on the platform all day and every day. Trading is about the analysis, the research, the investment time. Okay. Also, it's also about the time a day that you're willing to trade, because the markets exhibit different behavior at different times of day. And even though I'm primarily a currency trader, okay, I know what time of day I'm going to see the Euro Australian dollar have more activity than the Euro US dollar. I know how the two will relate. When the Euro Australian dollar climbed in the morning, I can expect the Euro to climb against all of its crosses as they open up across the world. But I don't trade every day. I spend days doing analysis. I spend days doing research. And you'd also be surprised. The markets are much different on Friday than they are on Monday, much more different on Tuesday than they are on Thursday. So you need to have some type of control of your behavior, of your planning, of your schedule. And if you write this down in your journal, you'll find that as you write things down, you'll tend to follow them better, because you always need to be in charge of the markets, not the markets being in charge of you. Because there's always, always, always a trade. The thing about is in online trading, it makes us different. If I was opening up a retail store, and we're going to talk about this a little bit farther down, but if I was opening a retail store and every day I'm paying rent, every day I'm paying electricity, every day I'm paying insurance, well, I need to have that store open, because otherwise I'm losing money every day. I need to be making every sale. In this business, it doesn't cost you a single penny not to trade. And the fact is, if you miss out the Christmas season in the mall, guess what? You lost most of your business for the rest of the year. In the financial markets, the trading arena, there's always a trade. You're not missing or losing a trade. You're not missing a possibility. There isn't one perfect trade. Okay. Every day, there are tons of trades to be had and tons of assets. So the other thing that we need to put into our trading plan is how we're going to do our analysis, how we're going to track each trade we make. Now, today it gets a little bit easier because all your platforms, especially Albexa, you can download your account, which has the entry, the exit, how much was traded, what your investment was. But that's fine. But it doesn't tell you for a future date, it doesn't even tell you for a week from now when you go back to analyze your trade, what strategy you use. Did the asset and the move turn out to be the way you expected? Or did you have to leave the markets early? Did you get stopped out? Because a losing trade that reached your stop loss that you got stopped out isn't necessarily a bad trade. It did what you had protected yourself from. You got stopped out. But if you got stopped out because you didn't properly measure market volatility and you placed your stop loss in the wrong place, you need to know this so when you're doing your analysis that down the road, you need to adjust how you're placing stop losses. So your daily routines are crucial for your trading success because based on them, we build a ritual to help us maintain a high level of focus in a state where we can perform at our level best. Now, all top athletes and sportsmen go through their own ritual in order to perform at their best. A trading plan should contain a written description of what you'd like to do or what you will do in the markets. This includes things like your trading edge, your strategy, how you're going to make your decisions, what time frames you're going to use, your strategy for risk management and profit taking, your overall goals as a trader. Now, let's take a tennis player. It's one-on-one. He's playing one side, you're playing the other. But he doesn't go up against his opponent using a public strategy. He knows exactly his opponent's weaknesses. He knows when he's going to serve. He knows where he's going to hit that ball to. He's going to know how that he expects to back in because he has spent his time. But it's also what gives him his edge. Now, your risk management and profit taking, your overall goals as a trader. Now, I call it stick-to-itness. Okay. This is a word I kind of made up. The creation of a trading plan is highly useful as it reduces the possibility of bad or irrational decisions. If you make this plan, you stick to it. If you have a written trading plan, then you have a trading filter that will filter only high probability trading opportunities. Now, if you guys have ever come to my other classes, I always talk about filters. I don't talk about trading strategies. I don't talk about technical indicators. I don't talk about chart patterns. I talk about filters. Because what we're trying to do is we're trying to take every trade possible that presents itself, whether we're getting this from signals being pushed out from our platform, whether you're getting it reading something in the newspaper, whether we're getting it from some analysis over here, whether we're getting it from some web blog we sat in on, or podcast we sat in, no matter how you're getting it, okay, you've now got something to sell you. Here's a trading opportunity. Now what we want to do is start filtering out that opportunity. Okay, we want to put it through a set of filters. Now, we don't have all day to track this down. So if your filters are, it's got to be above a trend line, and if it's as a buy, I'm only going to buy if it's above the trend line. I'm only going to sell below, or it's above or below a moving average. If it isn't, you throw that trade in the trash can, you move on. You haven't made the trade, you throw that potential trade in the trash can and move on. But if it fits that level 1 and that level 2, then you say, okay, I'm going to look at level 3. This is my third filter. If it goes through that filter, then I'm going to use my MACD. If MACD supports it, I'm then going to get ready to make my trade. Now I filter down. Now my risk management tools take it next. But now when I set my stop loss level and my take profit level, and yes, it fits my 3-to-1 ratios, but I realize where I'm going to have to put my stop loss because of the market volatility. It's lower than I can afford to make. Guess what? You filtered out that trade again. Now you throw it in the trash again. And this is very important because we're trying to filter away all the bad trades and leave us with very, very few trades. Too many of you guys out there are making way too many trades. couldn't make that many trades if you're a full-time trader and do the proper analysis, as well as doing all the other checks and all the other things you should be doing. You just can't do it. But I'll tell you something, if I were to ask 100 traders to send me a copy of their trading plan, guarantee you none of them would. Because I find most of them don't have it. Now, unlike business owners who generally have a business plan in order to provide a strategic vision to their employees and stay focused primarily on their line of business, most traders never take the time to create a business plan. Now, why are you exempt? Now, let me give you a little story. I mentioned the store in the mall before. Okay. For some reason, I don't know why, your desire is to open up a women's dress shop, a women's clothing store. Something you've wanted to do for a very, very long time. Well, you've been saving and saving and saving, and you've had your job and everything else. You decide it's time to do this thing. But you've estimated you're going to need $250,000 to get off on the right foot. You've got $50,000 put away. So you need another $200,000. So of course you go to your mom and dad. You go to your brother. You go to your best friend. Okay. Say, this is what I'd like to do. Mom and dad, they're your mom and dad. They say, you know what? We'll invest, not loan you. They're not loaning you. They're investing $100,000 in your business. Your brother says, I'll loan you, I'll invest, not loan. I'll invest $50,000 in your business. Your best friend says the same thing. Well, guess what? You now have people willing to invest in your business. You're thrilled to death. That's really a nice thing. But the fact is, before your mom and dad are writing you that check for $100,000, before your best buddy's writing you the check for $50,000, he wants to know what you're giving him for his money. How much percentage of the business, what you expect the business to do. What's your profit going to be? How many years is he going to have to be sitting back, with his investment before he starts seeing any money come back to him? Not loans, but an investor wants to see profit coming back. And they also want to know, will I own 5%? Will your mom and dad own 25% of your business? Will your buddy own 10% of the business? What is he getting for his investment? But they're willing to give you the checks, but they need some type of a plan and some type of a contract. Well, since they're your buddy and your mom and dad, you can write out a basic short-term business plan, a cover sheet, so to speak, and you get the lawyers to draw up a contract, and everybody signs it. And you set up the corporation, you give them the shares of the corporation. Now there's the $250,000 sitting in the bank. You find the perfect location. And you talk to the mall and say, I want that empty storefront there. Well, the guy from the mall says, well, how much footfalls are you going to get? What type of traffic are you going to bring in? Because he doesn't negotiate rent, because his rent's a base rent plus part of your sales per month. He wants to know, what are your sales going to be? He also wants to, you didn't realize he wants you open from 9 o'clock in the morning to 9 o'clock every night, because that's the hours the mall requires you. Okay, well, I got to go back and do my calculations, because how many employees do I have to cover those areas? How much business am I going to generate? What are my advertising costs? Now I found out there's the mall advertising costs. I got advertising their flyers and the things in the mall. Well, that's a lot of stuff. I go back and realize my $250,000 isn't even to cover my rent. Okay, well, we worked that deal out. Okay. Now we talk to the carpenters who are going to build out the store. Well, that's more money than I thought. So now I have to go to the bank, take a loan. I walk in the bank. I have the cover sheet and the plan I gave to my my parents, and my bank says, no, we want to see sales, turnover, inventory. We want to see everything. Well, now you got to go back and do a full-blown business plan. Well, this is what you have to do to be in business. Well, granted, he's looking for he got to raise $250,000, but it didn't matter if he only needed $25,000. Why aren't you doing the same thing for your new business. You're putting money up to risk. You're wanting to make profit. So it's a business. Now, in most lines of business, time is the main driver. Just like in the little retail store. He doesn't want to not open till January and miss Christmas. No, he'd like to open up right before season so he can get that busy part of the year and he can float on those big sales and have a good time. He knows January is going to be slow. January can catch up. But he wants November, December sales. So he tells the carpenter, hey, if you can't have it ready for us to move in the end of October, we don't need it. We'll find somebody else who can do it faster. Now, in the world of trading, as I mentioned before, time is irrelevant. Trading is one of the few areas in this realm where the space-time continuum has absolutely no relevance. But it's very important to realize that time comes back in a different way. We have to evaluate it on our overall performance. Because we need to evaluate, just like the businessman, he needs to track his sales, his profit, his loss, his turnover. He needs to be tracking everything every day. Not, oh, in 2 months I'm going to do an analysis of my inventory. It's too late then. Because if he doesn't know that pink is selling really well and yellow is not doing well, 2 months from now he's going to end up with a whole yellow store because all the pink sold out and he hasn't placed any new orders. So those of us who have been trading for some time know that 1 year's stellar trading performance can lead to a 2-month binge of absolute destruction, which can easily eradicate all we've worked for. So the only way to address this is by tracking our performance. Now, for me, my rule of thumb is I stop all of my trading after I've completed 10 trades. I do all my analysis. I write down all of my stuff, put it all in there. I evaluate everything I've done. And before I can start a new trade, I have to finish the evaluations. Now, 10 is my golden number. It's not yours. Okay. Now, this applies to both my swing trade and my day trade activities. On the average, it'll take me approximately 3 months to place 10 swing trades and about 4 days to place 10 day trades. Okay. As you notice, and I'm full-time in this industry. I don't place that many trades. I only mention the time element so that you can see how long it takes me to place the number of trades based on my trading style. But you can easily perform the same math in your head because you have to determine for yourself what amount of trades. There's no rule. Okay? If you don't even like doing the analysis, you can say, okay, after every 50 trades, but that's your decision. But you have to sit back and determine when you're going to do your analysis. The second way is how are you going to do your analysis? Now, I believe in the keep it simple, stupid method. I'm not going to get all involved in lots of complicated numbers and equations. All I want to do is look at my trades, look at strategies work well, look how many successful trades, not profitable trades, successful trade. A successful trade is a trade that I got out of at my stop loss and at a small loss, and I did everything correctly, or a trade that did exactly as I said, made profit, and I exited at my take profit level, and everything happened. Those are successful trades. Okay? Just because I placed a trade and the market jumped and I made money doesn't make it a successful trade. It makes it a profitable trade. So figure out what matrix you're going to use for evaluation. Now, I mentioned earlier, what time of day will I trade? What days of the week will I trade? We want to define our trading edge. Okay, what filters are we going to use to decide to make a trade, and how will this help me? But they don't have to be very easy. You can use a combination of support and resistance, trend lines, and high volume. Or you can use volume as your kicker. If volume doesn't match your trading decision, then I don't make the trade. And I mentioned also about identifying the assets to trade. Because remember, Goals without being worked out and without plans are nothing. So you got to get to work. You got to do the work. You got to stick to it to reach that goal. Because a goal without a plan is just a wish. Or you're just gambling. Because all of this is what takes you away from being a gambler and turns you into a trader or an investor. It's the work, the style, the research, the everything that you do. Because otherwise, you're just gambling. It doesn't matter whether you want to use support and resistance and trend lines. But the fact is, I draw my support and resistance and my trend lines and have them accurate on all my charts every day. Because they're my first filters. Okay. I always have in my plan my stop losses, where I'm going to place them, how I'm going, not what number I'm going to place it at, because that is my trade. How am I going to determine where I have to put my stop loss? Am I going to use swing lows? Am I going to use the triangle theory and use the apex and the base of the triangle to place my swing low? Am I going to place my swing lows? I'm going to place my stop losses below the last 4 pips below the last support line or 4 pips above the resistance line. How are you going to place your stops? Okay. Also, how are you going to determine your exit points, your take profit points? Because you need to have both of these to fit into your risk management. And before you execute a trade, you need to have all this written down, because when you go to the platform and open the trade ticket, you're not going and figuring this out on a trade ticket. You're already just dropping in the numbers to your trade ticket. Okay. So a lot has to do with, am I going to place a limit order or a market order? Am I going to place a limit order, and what entry price? Because if you place a market order, that's a stupid way to trade. Okay. Because then it's just going to give it to you whatever the market is. I'm going to always place a limit order, because that order, then I can tell the system when I'm going, at what price I'm willing to enter. I tell it where to put my exit point. I tell it where to put my stop loss. And when my parameters are reached, it executes my trade. But where do I get this from? I get this out of my trading plan. So for some reason, traders have fooled themselves into thinking that successful trading only boils down to the latest algorithm or technical indicator. This couldn't be furthest from the truth. When you are trading, you may forget there are human beings at the other end of every buy and sell transaction. This is the heart of head-to-head competition. And this competition changes continuously. While everybody may put stop losses, orders, technical indicators, charts, access to news, there are some traders who are able to translate all of this information into a successful trading plan and successful trades and make money. And these you'll find are the traders who make money consistently. Okay. Again, one of the things you trade, how much money can I use per trade? Okay. This is important. I see trades that traders are open at $50, $100, $500, $1,000, they go back to $50, $20, and this is erratic. And how much money can I have in the market at one time? Now, the end of the plan should come up with important things. You're going to think this is crazy, but it's when to take breaks. Now, my rule of thumb is after I've finished and completed 100 trades, I take the next day off. We're not talking about going away on vacation. We're not talking about bank holiday. The next day after I finish one, I don't turn on my computers. I don't look at the markets. I don't even look at my charts. I have one day that I forget the markets exist. First of all, it gives me a breather. Second of all, it reiterates the fact that I'm in charge. I throw my emotions away. It's like somebody who's addicted. Okay. You know, when somebody says, "Are you addicted to pain pills?" Well, the fact is, if I can skip a pain pill tomorrow and not worry about it, I'm not addicted. Or am I an alcoholic? I realize, if I don't want to drink on Tuesday, I don't drink, and I'm not sitting here thinking about it. Okay. So when to take a break is a forced break that lets you regain control of your trading in your markets. Also, we have what we call limit up and limit down. If I lose more than 2% of my capital at any point, or my first trade of the day stinks, I opened the trade, I put it in the market, and by the time I finish the ticket, I'm already stopped out. Well, yeah, I'm getting pissed. But the best thing to do at that point is to close your computer and go away. Because like I told you, in 80, 81, 82, I made a fortune. 83 and 84, I lost it all and more. Because in 82 and 83, I would start chasing all of my losses. I should have gone fishing. On the other hand, if you do very well on your first trade, take the profit. Not necessarily your first trade, it could be your second trade day. But if you do very well, take your profits, close your computer, and be happy. Because either emotional state can make you make mistakes. When you had a very successful trade, you tend to risk too much in your next trades or get a little bit sloppy. When you have a loss on your trade and you're in getting in a bad emotional state, you tend to chase it. So go away. It's hard to do. It's a difficult thing to do. Now, if you have a good plan, it'll keep you from chasing. But we're still human beings. Our psychology does affect how we're trading. Now, as I said, there's no perfect trading plan for anybody. And I know it freaks you out when we talk about all the stuff you got to write down. Well, you can write it any way you want. I started years ago writing mine on index cards. I have sticky notes all over the place. I have everything. Thank God today we have computers. We have Excel. You can track most of the stuff on Excel. You can actually set yourself up a set of steps in your, in an Excel worksheet or a Word document, and you just follow that and you just fill it in each time you're getting ready for trade. Unfortunately, there's nothing you're going to find. Now, I gave you some handouts that have some models to start with, but there's really not a program out there. There's not a model, because all of this is about you. And you've got to start somewhere. And you'll find this doesn't mean building, starting the wheel from scratch. It doesn't mean starting over. It just means, like I said, start with whatever trading idea you have now. Put it on paper. Define it. And then you'll find it's easier to work in either direction from there slowly. You're not going to have this finished plan. This is not a college paper you're writing that you have to have it finished before midterms, or else you're not going to get a grade. You can develop it and keep developing over the next few years, because you're going to keep adding to it. And you'll find that this will make you a success in the long run. So on that note, I'm going to say goodnight to everybody. I'm sorry if you felt that I'm lecturing you. I'm really not. I really want to see you become successful traders. And it does require the work. And that is ultimately what's important. Understanding this is a part-time job, or it's a business adventure. It's an investment in yourself. It's an investment in your future. You worked hard for your money. I don't want to see you throw it away. But now you have to work harder to make the profit. So thank you very much. And if you have any questions, go to www.alvexo.com and go to their education, and there's lots of guidance there. Or you can contact somebody at Alvexo, and they'll be glad to set you up with a one-on-one financial analyst and chat back and forth and figure see if they can help you out. So have a great night now, and we'll talk to you again real soon. Bye now.